Alright, listen up. Whether you are starting from scratch or realize it's time to unlearn the jank that's been holding you back, this is the video you are looking for. Today, we are going to dive into the basics and fundamentals of trading. So, make sure you stick till the end and watch every second of it. You are probably not going to reach profitability if you don't have your fundamentals right. So, let's get going. So, trading in theory is really simple. You have a strategy, you apply it to the market when it's the right opportunity, and you have an outcome, a win or a loss. And of course, as I said earlier in my videos, if you haven't watched them, go check them out. You'll come up against losses, which is normal. So before you build your strategy, you need to have three things clear. You need to learn how to analyze your charts, how much money you're going to put in each trade, and which broker you are going to use. For analyzing charts, we are going to use TradingView, and I'll help you out understand them bit by bit in every video. On risk management, we're going to work throughout the series as well. And actually, you'll need to know how to calculate your lot sizes. If you don't know what lot sizes are, it's okay. We're going to get into them later. And in the Discord channel, you are going to have some resources regarding this. And a broker is really important. You need to have a broker with low fees and that has high regulations. And later in this video, I'm going to share you what broker I use at the moment. So let's take everything step by step. After you make an account on TradingView and maybe download the app, you are gonna be welcomed by probably a chart that looks like this. You've probably seen charts like this in the past, which is fine, but we're not going to use them like this. And you may ask yourself why. Because these lines don't give you enough information. We're going to use candles. That looks extremely different, I know. And let's get into candles and how they really work and their anatomy. So these are the two types of candles we're going to work with. We're gonna call the green one a bullish candlestick and the red one a bearish candlestick. So let's take the bullish candlestick first. You always have the open at the lowest part of the body and the close at the highest part of the body. While you have these lines, vertical lines, which we're going to call them shadows or wicks. These are the highest point and the lowest point. And you may ask yourself, what are you talking about? These are intervals. So let's say you have this line right here at 12 AM and this other line right here at 1 AM. This means that in this interval of 1 hour, the price at 12 AM was right here, at 1 AM over here, and the highest point was this one, while the lowest point was this one. This works theoretically the same at the bearish candle. The only thing that changes is the price where the candlestick closes. So we don't have the open at the bottom, we have the open up here, while we have the close down here. And the wicks mean the same thing. You have this as the lower part of the time frame or the candle, and this is the highest part of the candlestick in this time frame. So I think we get the candlesticks right. Considering that now you understand how candlesticks work, we're going to dive into what really moves the price of an asset. Of course, you know that you can sell and buy them, but let's see how that really moves the price. It's really important for you to notice that it doesn't matter how many people short or long an asset. The thing that matters is how many money are being introduced in a market or taken out of it. These orders change a lot because people are buying and selling, and when you see these green orders over here, is the highest price a buyer is looking to buy at, and these red ones are the lowest price at which a seller is looking to sell at. So let's say I'm looking to buy Bitcoin, and the way it works is basically a broker takes this order from this guy that is looking to sell his assets at the lowest price to me that I'm looking to buy at the lowest price possible. And this is going to be very important when we get into liquidities, because if I'm looking to buy a very high amount of Bitcoin that we don't have sellers at the exact price, this is going to get a little complicated. And if I want to buy, let's say 500 Bitcoins, I need to get it from multiple price points because there are not enough sellers at this exact price that I'm looking to buy at. Let's say I'm a big company like BlackRock and I'm looking to buy 500 Bitcoins. And there are not enough sellers at one price point in this scenario that are willing to sell that much because they don't have it. So what I'm doing as a big company, I'm going to push the price up at a point where there are enough sellers from which I can buy from. And that's where liquidity and manipulation comes in. We're going to get into that later in this series, but first let's take everything step by step. So knowing this is really going to help us get the best trades possible in the direction that would give us the best outcomes. So for example, if everyone is buying, then the market sentiment is bullish, meaning we get a bullish trend. While the opposite, if everyone is selling and the market sentiment is bearish, then we are getting a bearish trend. And it's pretty straightforward. The bullish trend will look like this. The price is going up. And a bearish trend will start looking like this. The price is going down. And the price might change its trend from time to time and from time frame to time frame, because if we go into TradingView, we are right now on Nasdaq, on the daily time frame you can clearly see that the price is moving up. That means a bullish trend. But if we change the time frame for, let's say, 15 minutes, you can clearly see a bearish structure. You see the price is moving down, down, down. But if we zoom out, of course, the daily time frame takes in control. It really depends on the time frame you are in. But what you need to know for the moment, and as the base knowledge, that you have these two trends that you need to follow. In sometimes you can see a consolidation phase in which the price moves in neither direction, which you can see, for example, right here. In this time frame, which lasted around 3 days, the price was not really moving in any direction. And in these time frames, you're looking to not really take trades, because probably you're going to get stopped out, liquidated, because here the big players are looking for liquidities in which they can buy that orders that I was talking about earlier. So knowing the trends, I'm gonna give you another thing to maybe predict when the trends will change and have an advantage. So 1 hour, you can see, let's go for 2 hours as well. I think we can see the price even better on 2 hours. Yeah, let me check. Let me find the place. Okay, I lost it. Okay, here it is. So you can see the price in here moving in a bullish trend. And sometimes the trend will change. It's not going to be bullish forever, and you probably know that. So how can you predict when that is going to happen? Because right here, the price is not moving in a straight line. As I said, there are sellers and buyers, so it will be like a battle. We'll call these lower parts low, or in this case a higher low, because we are on an uptrend, and these highs a higher high or a high. It's simpler for you if you call it a low and a high. So let's say you have this low over here, this high, low, high, low and high, and so on and so forth, until you will see that you'll have only a high. This is the last high that you're getting around here, and this is the last low. And you've seen that when you have a last high, then the low is going to be, we call it breached, I might say, for you to understand it better. It's called the market structure shift. When this low is taken out, you're probably going to see a change in the direction of the market, which really happened in this scenario. So this low was transmitted, was changed with this low, and this high is going down and down. This is the high, and this is the low, then this is the high, and so on and so forth, until the trend will change again. And yeah, in here you had this low at the beginning, this high, excuse me, then it was breached. This was a fake, a manipulation. But we are not getting into that today. These are way complicated things, so let's just stick to the fundamentals. We're getting to the second thing, which is how much you're going to risk per trade, risk to reward, and everything related. So you have a chart in here, or a table actually, in which you can see the risk to reward and win rate cheat sheet. So this means your win rate. So let's say in 100 trades you win 40 That means you have a 40% win rate. And this is your risk to reward. What really is risk to reward? So in trading, if you place a trade in which you accept to lose $100, you are going to have a risk to reward. So if you put your take profit and 1:1, which is this first one, you're going to make the same amount that you're risking. That means $100. If you're going for 1:5, for example, you're going to make $500 if the trade hits your take profit. It's really important to have your risk to reward positive. And for me, if I don't have a trade that has only at least 1:2 risk to reward, I'm not taking that trade. In here, you can really see what you need to be in profit. So knowing your win rate is really important. So at first, before you put your money into the market, you need to do some demo trading, knowing how your strategy really looks like. And then let's say you have a 40% win rate. Then you need to have a stable risk to reward of at least 1:2 to be profitable. You'll have to calculate your lot sizes as well. In TradingView, you have these positions that you can use them as well as for calculating lot size. So let's say you have your stop loss over here and your take profit maybe over here, let's say, only for the sake of it. You have here quantity which you can calculate in here at account size. I don't really use it because on some assets on TradingView is really bugged, so I don't recommend you using that. I'll give you some resources in the Discord channel. If you enter right there, you can see what's going on. We actually have a community as well with some few traders at the moment, so I'm waiting for you guys to enter in there. We can start some conversations, and as well, as I said before, you have a lot of resources that are going to help you out. So regarding the broker, I use Multibank Group. I'll give you guys a link in the description. I really recommend it. So they have one of the tightest spread in the market. They have 1:500 leverage to all accounts, and they're really regulated. They have more than 16 regulations on their platform, and they really have a big clientele. So you can expect a lot of advantages. They have customer service that is active 24 hours every day a week. And actually right now they have a 20% deposit bonus that is going off deposit up to $40,000. So feel free to do so. And they have liquidity providers such as Bank of America, JP Morgan, and much more. So I'll give you guys a link in the description. Go check it out. Maybe you like them and make an account there and you start trading with them. So I think after this video you're going to have a strong foundation and base for trading. And remember, this is only the beginning. We are going to dive into more advanced techniques and strategies that you can use for your trading profitability and success. If you found this content valuable, let me know in the comments, drop out a like, and see you on the next one.